Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month nickel. In late January, we saw the market move from a January-based ascending wedge pattern straight into another similar setup. Originally, it was a bright red February-based possible ascending triangle or ascending wedge pattern that morphed into what we now have, a shallow bright red bull channel, currently 17,200 to 18,470. I originally thought this might be part of a large late January bearish halfway hesitation pattern with potential down as far as the 15,750 zone. And we did have an attempt lower to try and trigger such a pattern mid-March when I set the trigger point as the 50% Fibonacci line of the 2025 to 2026 move at 16,515. But all moves lower failed. No confirmed closes below this 50% Fibonacci line happened. I even looked at the action over February and March as a nascent bearish cat's ears pattern, but it all came to nothing. And instead, February and March and now into April have made two other significant patterns. The first, and the more dominant now, is that shallow highlighted bright red bull channel. There's nothing I can add to it. It's simply the main dominant pattern right now. The second pattern was a little more obtuse, but still there as a pattern. On Monday last week, we broke higher from it. It is the late February to mid-April dark blue descending expanding wedge pattern. This one had the required number of touches per side, each side, and with a significant break higher, I decided last week to lay out some targets for the move up, for some somewhat optimistic but valid targets topside. Thus, the primary target X is up in the 18,835 area, close to the August 2019 high 18,850, and a secondary hard to reach target X1 is up in the 19,135 area, close to the highs of this year. The cause of this latest move higher can easily be seen as at the turn of March into April, prices became squeezed between the dark blue upper trend line overhead, currently at 17,210, which had been helped by the declining green short medium moving average, which is currently at 17,440, and from below by the rising bright red lower bull channel line. Thus, it was not a surprise that we saw such a move higher as something had to give way, and it was a turn of the dark blue upper trend line and green short medium moving average. However, since that break higher, prices have been held by the second and third congestions overhead. Ones I saw overhead. The first was easy enough. It was the combination of the October 2019 high and a 50% Fibonacci line of the April 24 to May 25 move, both at 17,810. However, this only capped prices for one day, on Monday last week. Instead, the second, the July 22 lower 18,265, has become somewhat of an attractor, especially on a closing basis. And the third was, of course, the bright red upper bull channel line. Will the hesitation based around the July 22 low see prices possibly utilize it as a midpoint in a bullish halfway hesitation? Well, possibly. And if they did, I would have to see an attempt up to around that target X1. But first, let's see if the bright red upper bull channel line can sufficiently cap the market, or will it give way? If it does give way, then it will raise some interesting possibilities further up beyond target X1. LME 3-month zinc. The market has cleared up a number of patterns affecting prices in recent times, all happening all at the same time. Such we're left here with one big old pattern, and it is a big one I've spoken about before, and also one new pattern. The big old pattern is the bright red May 23 to April 25 bullish Andrews pitchfork, and especially the middle time, which is currently at 34.19. We reached this middle time late last week and are now seemingly starting to hesitate around it. In doing so, prices overcame a pair of resistances last week that are now supports. They are the 50% Fibonacci line of the March 20 to March 22 move at 33.29 and the 50% Fibonacci line of the April 22 to May 23 move at 33.77. The market slipped through these fairly easily, which was somewhat of a surprise, only to be caught by that previous mentioned bright red middle time, as well as the lesser Fibonacci line at 33.78, plus also the second newer pattern. And of this newer pattern, it's the dark blue middle time, currently 34.14 of the April 25 to March 26 bullish Andrews pitchfork, which seems also to have been party to the hesitancy we have seen late last week and also this week. So, what have we in the way topside apart from this hesitancy we seem to be in? What have we in the way topside that can slow or even stop the rise? Well, to be honest, not that much. We have the April 23 high at 35.12, and that is it. Between where we are now and the high made back in January at 35.75 and the February 2018 high, a little higher at 35.95. That's all we have. LME 3-month tin. The move up in mid to late January was due to one definite reason and another possible one. The definite reason was the bright red middle time, currently 41.110, of the big old pattern, still even now dominating the market, and that is the bright red shallow big old 2020 to 2022 bullish shift pitchfork. A pitchfork that is still in operation 4 years after it was created. The secondary reason was just below this pitchfork and was the slowly rising long moving average, currently 49.10. In truth, I think this bright red middle time caused a halt to the decline, just as the bright red upper time did, currently at 58.530, did back to the highs, with the highs of the double top seen in January and February. Since that halt in the move down in March, prices created a small ascending wedge pattern over mid-March to early April, breaking out of the lower trend line. But instead of heading lower for some appropriate targets below, the market chose to morph the ascending wedge pattern into a mid to late March to date dark blue channel, bull channel. And that's currently 49.060 to 52.340. The pattern is now seemingly taking over the running higher of this market. So what do we have in the way topside? Well, as I said last week and today, it seems prescient, I said, and I quote, I would look closely at the 2022 high of 51.005. This may not look that great a congestion at first glance, but it was instrumental in making the centre of the double bottom in mid-February, and would thus not ignore it. However, we also have some Fibonacci levels for the whole of the 2026 move at 47.595, 49.775 and 51.960. The most important of these is the 50% Fibonacci line at 49.775. Beyond these, well, there is limited resistances until we once again start looking at the bright red upper time, currently at 58.530 once again. End of quote. These points are still valid today, but I would also now add both the upper and lower dark blue bull channel lines to the mix.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.